Here we go. All right, everybody. Stocks by the numbers. Welcome back. As you can tell, we had quite a bounce back today. Trump talking about tariffs, Venezuelan oil, and markets obviously had a big spike up. As you see, S&P just about 100 points on the close, 1.75%. Nasdaq ended up closing up over 2%. Dow saw almost 1.5%. Yields went up though, and the dollar stayed up, I believe. So we even have some people. Shout out to Sleek talking in the Discord about the major indices coming right up to the 200-day moving averages. So we may potentially have a slight rejection tomorrow. But I still say, believe it or not, even with everything Trump's doing, I still personally believe that markets are still up too high. So I wouldn't really get too comfortable. And if you're doing any day trades or any short-term trades, you turn around a couple of days later, all of a sudden you turned out right and the position's up 30%, 50%, whatever it might be. In my opinion, you have to secure profits where you can. This is still a very volatile market, and you will see what can happen from minute to minute. If someone says something, obviously Trump moves markets, so just be careful. That's basically what I'm talking about. But I did want to speak about two stocks that we've looked at in the past that had pretty good days today that, in my opinion, I actually think there's still more value here. So the first one is HIMS and Hers Health, symbol HIMS here on the New York. And this stock had a very good day. It was up $2.66, over 7.5% on the close, getting up to 37.41. And if we back out, we look at the long-term chart here. We were looking at it last time, and we were talking about the potential rise above this resistance trend line. But I also said, in my opinion, I think it is going to come down and retest this support level here. And you can see it came down to the support trend line. Looks like it hit this fib right here of about 31.01. That's exactly the low here on this day, 31.01. And I'm just looking, okay, and this hit a low at 31.02. And then we had the bounce. You can see how it reclaims above the moving average. And then, of course, today on the big green day, we had a big run up. And the stock technically now is back above the 20-day moving average. This is a one-year chart, by the way. So in my opinion, it could potentially get back up here, which was the previous support level. Remember, we were bouncing, spiked up, came down, tried to hold it, and then broke below it. So technically now, in my opinion, we get above this moving average, and then we make our way like back up there. So I do personally believe that this stock will get back to 50 plus, get back above that previous trend line, and get back near those highs because the company is growing very, very well. Real quick, we'll look at the numbers. 8.33 billion. Again, the only thing in my eyes that looks a little high is the PE. It's sitting here at about 65. But EPS has been solid over the years, over the quarters, revenue growing, more and more profitable, right? We look at last year, 2024, we closed out 1.48 billion in revenue, 126 million of net income. So the company profitable, the numbers are growing. And if we just check some of our numbers here real quick, yeah, we like this stock. Well, I like this stock because very low debt, improving cash flow year over year, you can see. And of course, cash on hand continues to climb over 220 million as of last quarter. So debt minus cash, you're still over 200 million. We have assets outweighing liabilities in both the short and the long term. Added up to the equity, we're at what, like 676 million. And then we come down here and we're at about 1.6 plus the 670, right? So now we're talking, what, like 2.25 billion kind of. Market cap up here, 8.33 billion. So I understand it's kind of right on the cusp of being even potentially viewed as overvalued. But I said also that with Trump coming in, just like I personally saw with the first administration, the first term from 2016 to 2020, what it becomes now, in my eyes, is, first of all, you should do a lot of PE hunting, price to earnings ratio, right? Your PE. You should do a lot of PE hunting. So what I used to do, believe it or not, like markets would be like this, like the first term under Trump. And what I would do is I would just pull up a list of like the Dow 30 components. And I would just look to see which of those stocks had money flow out of them, which ones are nearer to the 52-week lows as opposed to the 52-week highs, which, sectors or stocks pulled back and have their PEs now sitting at like 12, 15, 17, right? When everything else is like 27, 31. and I would just, swoop up some calls on those stocks that sold off that are near the lows, and you would actually see the slow rebound coming back. And that is one strategy. But also, I mentioned Steam Friend. My apologies, I forgot to sign off. But I also mentioned that fundamentals will ring true. So companies like this, even though they might be viewed as overvalued, or we're trading 3.5 times quote unquote fair value, 65 PE, right? The reason why I feel that a stock like this would get beaten up with a market and then rebound almost instantaneously is because of how solid the fundamentals have been. So that's why I actually think HIMS, again, I think it goes back up and it gets to 50 plus. Let's switch over to stock charts real quick. You can see we almost got to that 50-day moving average, 38.71. Stock hit 38.18 and then paused a little bit. Technically above the mid-Bollinger Band, though, 36.67. We're up here at 37.40 on the close. And you can see, look at that MACD. We curled perfectly, and we're potentially getting ready to cross to the upside, signaling more bullish momentum. So, in my opinion, that could happen probably in the next day or two, and then that'll help pop it up to the mid-40s again. Unless markets, of course, really start to sell off. But we had a big run up and then we had a big sell off, and you can see our Bollinger Bands kind of wigged out, but now we're coming back up and we're getting the tightening. And you know what I say about the tightening Bollinger Bands, that usually leads to a pop up or down. And in my opinion, this one should pop up as long as markets don't consistently, really start to sell off. So I know I kind of just went against what I originally said, that markets should sell off, but again, if we keep having a couple of days like today, something like HIMS is going to benefit from it. Reward from it. What the hell am I talking about? RSI here on the daily, 49.5. Still have a lot of room to go there. Again, on the daily, potential MACD crossing. Switch over to the weekly. RSI, basically same thing, right? Middle of the road, came down to about that 50 benchmark and had a slight little bounce here the last week or two. So even though we did have a nice bump today, RSI still sitting at around 55 on the weekly. So you can see how we've been stepping up and up and up. We had the big retest, and now we may kind of step up, even if it's not higher highs like we were making here, because it really did pop and break out. So you can see, though, we're technically above that previous high, right? So maybe getting back like halfway of this spike, which as you see is maybe like 45, like the high 40s. So that's why even the top Bollinger Band on the daily, was 44 something, right? So that's why I think we can easily get back to the mid 40s. And if we do continue to stay green like that, I think that 50 retracement is going to be not an issue at all. It's not going to be an issue. MACD recently crossed to the downside on the weekly, but the stock seems to be holding that mid-Bollinger Band because, in my opinion, the fundamentals are strong. And even if we do have a big drop down, you can see the 50-day moving average just throughout 2024 went from, what is this? Looks like about $9. Now it's sitting here at over $24, right? So this is why you want the slow, steady growers again, those increasing moving averages. But HIM's looking pretty good in my opinion, so that's one to keep an eye on. Also, I wanted to look at SoFi. SoFi, just absolutely beautiful, and you can see how we were originally in this downward channel, and then we kind of spiked up out of it. And you can see, look, we came down almost right to the bottom of that channel, tested that fib. I was looking for about $11 on a pullback, I believe, maybe like around here, when I mentioned in the Discord maybe about the stock breaking this support trend line and the fact that it could pull back into this channel. So I was saying maybe like 12, 11s, like that could be coming. So the stock ended up pulling back. You can see right down to 1085, it looks like. Got right back above this fib level here of 1122 and just continued to bounce. And of course today had a big jump up. You can see over 6.5%, up 85 cents to 1372. So now, similar to HIMS, the fact that we sold off, these nice growing stocks, pulled them back to key support levels. Now we have the rebound, and then of course today's pop gets both of these names above their 20-day moving average. I think SoFi continues as well. And even if we run up here, you can see this is going from the tops of January 24, 25, cutting across to the top of the body right there, February 18th. Top of the body, it looks like a February 19th right? So that's our resistance trend line now. So in my opinion, I think even if we get back up here slowly, as you can see, you're looking at about 14.5, 1460. So you still have about another point to go. And then if we do happen to get up and close and retest this fib right here, 1491, that would actually put us above this level. This is why I love my trend lines, baby. Extend them out. Boom. Look at that. Look how it's almost meeting up right there. Right there, potentially. Now, that could have happened today, but of course it didn't. But you understand my point. You can get back up to the high 14s here, top half of the 14s, inside of the next day or two, potentially. And then if we do reclaim above this trend line, then you can see, look, this one runs in. There it is. This one runs in, right? So you get up above there, and then you'd potentially stop right there at about 15.75. But then you'd get back up and probably test the previous highs, in my opinion, of 17, 18 plus. I know some people were saying that this stock really went on a big run and it might continue to sell off, excuse me. But in my opinion, this stock is going to consistently keep growing over time. I actually think it's decently valued here. I do not think it is overvalued. It's definitely trading at a lower multiple to our fair value when compared to something like HIMS that we just looked at. But market cap right now, 15 billion. We have a PE up here at about 33.7. The EPS on SoFi has been solid. Over the years, the revenue growth has been phenomenal. Over the quarters, it's been holding steady. You can see profits climbing. And for 2024, 3.77 billion in revenue and about $500 million of net income, right? So if we add those up together, we're at about $4.25 billion, right? And if we come over here and we check some of the numbers, you can see the debt's up here at 3.3 billion, but the cash, they have about 2.76 billion in cash. So that would be about minus $500 million, right? But if we switch over here, you can see the equity has been consistently climbing. It's up to over 6.5 billion. So if we subtract that $500 million from this figure, we're at 6 billion. But then we come down to the actual revenue in the business, and we were at 4.25 billion. So that puts our quote-unquote fair value, in my opinion, of this business at about 10.25 billion. And as you see, we're trading about 1.5 times quote-unquote fair value, which means, of course, a move up to 20 billion would be roughly a 33% move, which would be another 4 points roughly on the stock, which would bring us to the high 17s, potentially 18, which is right near the 52-week high. But overall, in my eyes, even that 2.5, potentially 3x multiplier would value this business at 25 to 30 billion, in my opinion, which would mean that long term you could look for a double up from this level, which would bring us to anywhere from 26 to roughly $28 a share. So in my opinion, I actually do have now a longer term price target on SoFi after this pullback. And if the growth continues, I'm looking personally for $25 to $30 on something like SoFi. So I still like it, and I just wanted to show you guys how it looked in some of these technicals and the way these two names got back above the 20-day moving average, and also just a couple of trend lines you can keep an eye on for these names. Let's look at stock charts, and I will let you go. I was sick for the last couple of days, so I know I didn't upload too much really this month, actually. But again, I always said, I mean, of course, I could use the ad revenue, but I am a man of my word, and I always said, if I really don't have anything to say, I'm not just going to pollute and flood my channel with random videos just to make a buck for the day. And, you know, I really didn't have much to say, but today I saw a couple of things, so I figured I'd jump onto a video. But you can see here on the daily as well, SoFi just got above the mid-Bollinger Band, had a really nice healthy bounce also after coming down to the bottom of that channel, touching that fib in the low 11s, and you can see also perfectly bouncing off of that 200-day moving average, climbing up nicely, having the pop today. 50-day moving average 1457, top Bollinger Band 1480, 50-day 1457, going up to the trend line about 1460 and change. See what I mean? So that's how it all meets up. So in my opinion, that's why I think it's going to continue to climb. MACD recently crossed to the upside, so we're on the up and up here with SoFi. RSI still the middle of the road here at 53. We can definitely continue to climb. Let's check the weekly. Same thing, RSI middle of the road sitting here at 52. The bounce back, we were looking for what, like 1460 and change, and we have the mid-Bollinger Band on the weekly at about 15. So that's why I'm saying I think it retraces back to that line, and then if it is able to get up and close above it, then we're going to be off to the races, and we should technically go back to the high teens. And if that happens over the next couple of weeks, that will cause the MACD to curl and head back towards the upside and potentially signal and give us another bullish cross on the weekly time frame. But you know, you had the 50-day moving average coming up over the weekly. You can see it's in the high 10s now. Stock pulled back to what, like 1085, and then had a bounce, hit that 200-day on the daily. So in my opinion, it really should bounce and continue to climb. And I just laugh because remember this whole time when we were looking at it, and people were like, "Oh, it's at 6. It's hitting new lows." What I say? I said, view it as an opportunity to accumulate shares and build a position. And even if you missed out on the high, you're still up 100%. Absolutely beautiful. Let's check the pivot points, actually. I'll let you go. Okay, we had a pivot point here on the weekly, 1268. We're a point above that. Next pivot point to the upside, 19 1/3, roughly. So that's why I'm saying I do think it gets back to the high teens, and it might even make new highs. Moving average, 1457. Trend line around 1460. And we have a pivot point here at $15 even. So in my opinion, I do think it continues up. That'd be a quick, even 10% from this level, right? Even if you stepped in, maybe you grab some shares. If it's slightly down, you know, tomorrow morning, 1350, 1360, you step in, even if you buy a couple of shares, just a quick run back to 15, you know, you'd be looking at a quick 10, 12% profit. So definitely nothing to sneeze at. It's the base hits, right? That's what we talk about. Everybody wants home runs. And believe me, I completely appreciate that perspective. But if you consistently hit base hits, you're going to consistently keep climbing that mountain. Right, we got the MACD crossing, and I mean, previous pivot points from last month, you can see, yeah, maybe like about 42, and it looks like maybe like 46, 47, but technically for this month, the next pivot point's 5102. So that's why we could maybe, with this MACD crossing as well, you might see a surge back up to 50 plus on something like HIMS. But SoFi, HIMS, again, two names that we looked at, two names that have performed very well for us over the years, over the months. And yeah, I just, you know, I saw that in the charts and stuff, so I wanted to jump on and just wanted to throw my 2 cents. Again, you know, if you're trading day by day, you know, if you're wondering if markets are going to hold, again, could be rough. Could be rough to make that call. Again, looks like we were kind of channeling upward, which means we should have broken down technically, right, in the technicals. But, you know, we had the tariff news today, and we popped up. And the S&P technically, as you see, there's a 1-year chart. The S&P technically popped up and closed above that 20-day moving average. So we may now have a retracement. You know, even if we stop here, like the last place it kind of hung out and danced around, like another 70, 80 points maybe on the S&P. So we might continue actually for the next day or two. NASDAQ, again, you can see basically same thing, right? We had this big leg down, upward consolidation, almost looked like a bear flag actually, in my opinion, but then we had the pop up today. However, the rule also with the candles is that when you have a gap up like this, sometimes it comes down and then closes that gap, and then it might bounce. So that's why, again, might be hard to call day by day, especially if we see something in the technicals and then it doesn't come to fruition, and then freaking Trump at, 11 o'clock tweets something out and just changes the whole dynamic of the market throughout the rest of the day. So we know that, it's pretty volatile right now. It's swinging around. But I still say, even if you bought early, maybe a lot of these names, and you got caught in the sell-off, I still say, in my opinion, if it's a fundamentally sound business and company, then technically you really shouldn't have too much to worry about. You might just have to deal with some short-term volatility. But that's pretty much it. I'll end it there. Once again, Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. Thumbs up algorithm, right? All that stuff helps. Subscribe to the channel as well. That's our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I do want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.